we have Fidelia Aguncha for Business News. Hello, Fidelia.
Hi, Aneta.
Just a few days ago, the Central Bank of Nigeria announced the steps it was going to take to tackle loan default. I know that has been generating reactions. Please fill us in.
Well, that's correct, Aneta. Financial experts have thrown their weight behind the directive of the Central Bank, which states that loan defaults will be settled using deposits made in other banks. The Apex Bank said this directive will encourage banks to increase lending and as well control the high rate of non-performing loans in the banking sector. Additional Dushoga has more.
Rising cases of non-performing loans in the financial sector is threatening the central bank's resolve to attain a loan-to-deposit ratio of 60% by September 30, 2019. Commercial banks have also raised alarm that in a bid to meet the stipulated LDR, there might be a surge in the number of loan defaulters. To change this narrative, the CBN and commercial banks, after hours of meeting, arrived at a conclusion. The loan default will now be settled with deposits made into other banks.
With these pronouncements, all these banks will share information regularly. The frequency has not been, the details around the frequency has not been revealed, but at least with them sharing information, they will be able to increase the penalty for individuals that default on loans, such that at least they can ease those people out of the financial system or deprive them. They know the consequence is more severe than it used to be. And what you will see is that now we have a situation where there was an announcement by AMCON recently that about just 350 people are responsible for about 80% of the non-performing loans that AMCON has. The total loan debt profile that AMCON is managing is about 3 trillion. And imagine just 350 people being responsible for 80% of 3 trillion. That's a lot.
Reports from PricewaterhouseCoopers PwC Nigeria shows that the small and medium-sized enterprises contribute 48% to national GDP. And an increase in the LDR will help stimulate the economy with a growth in the gross domestic product.
The objective of all these policies we've seen in recent months is now geared towards at least to broaden the base, to ensure that a lot more people have access to credit. There are so many SMEs in Nigeria that find it very difficult to access credit, either because the rates are too high or there's even no bank to listen to their proposal at all. So what the objective of all of this is to ensure you can ease those people who are serial defaulters out of the system, such that those loans will then be available to credible borrowers who are really in need of the facilities.
As much as the Apex Bank is seeking to sustain increase in consumer credit and granting loans to SMEs, its interest rate still pegged at 13.5%, according to analysts, may be directly linked to customers' behavior to loan repayment.
The rates are so high that without proper assessment, what you will see, like I said, the level of education around things like bank loan and facilities needs to be improved. Because you have cash in your bank account does not necessarily translate to you being able to take on huge amounts of loan at 27-30%. Most businesses don't even do a detailed analysis to understand how much cash really do they have, what's the sustainable level of cash that they generate, and do they really have the capacity to pay the loan.
If deposit banks are able to meet up the 60% target for the loan-to-deposit ratio, the sector will add 1 trillion naira in credits to the economy, and this will see banks giving out more loans to applicants. With these latest interbank communication policy, accessing credit history of loan defaulters, banks are now at lesser risk of running into debt, and this will help ramp up the growth of the Nigerian economy through investment in the real sector. Adeshawa Dushoga, TV360, Lagos.